Have you ever imagined waking up to notifications that your bills for the month have been paid without you actually having to spend your own money? This might be one of the biggest reasons, if not the biggest reason, why average people like you and myself look for different ways of earning passive income. And I've always said that one of, if not the best way to earn passive income is by investing in stocks that pay dividends. And out of the thousands and thousands of dividend paying stocks that exist in the stock market right now, only 66 of them pay those stocks every single month. And in this video, I'm going to show you guys my 3 favorite monthly dividend paying stocks, how much they pay every single month, and more importantly, and most importantly, what you need to look for before you invest in any of these companies. It's kind of a weird way to think about bills, but unfortunately, our bills are really reliable. Unless you can pay it off like a car note or a mortgage, typically every bill is going to come every single month and it's going to charge you roughly the exact amount. So when it comes to investing in monthly dividend stocks, you probably want that same reliability. But how do you know what companies are safe and reliable enough for you to invest in to gain those monthly dividends? In order to do that, you have to keep in mind of these 3 different traits when it comes to any monthly dividend stock. And I'm going to throw in one monthly dividend stock for each, being the 3 that are some of my favorites. In order to be able to pay those monthly bills with dividends, you're probably going to want to make as much money in dividends as possible. And that really means that you have to take advantage of those stocks with the really high dividend yields. Of course, that can get really tricky when you're looking at a company's high dividend yield, considering how long that will last. That's something I mentioned in a previous video. Make sure you check that out. But there are a lot of monthly dividend paying companies that are really good regardless. QYLD is one of my favorite monthly dividend paying exchange traded funds that makes its money by selling covered calls off stocks in the NASDAQ 100 and takes those premiums and disperses it all to their shareholders as a dividend. And because of those premiums, it's able to have a little over a 12% dividend yield, which means it pays about 17 cents per month per share, or about $2.04 per shareholder per year. So the dividend paying out being pretty nice in consideration of the share price being so low, and the fact that this is an ETF, meaning that it's automatic diversification, this is definitely an investment that you want to check out. When we start investing in a monthly dividend paying stocks, we want to make sure that those payouts last, unfortunately, as long as bills, so that one day we can have enough money getting paid out to us that we can use them to start paying off some of our monthly bills. And in order to do that, you have to understand a company's share price versus the company's mission. A company's mission is basically, what does a company do? And that's really important to keep in mind, especially when you're looking at a company's share price, because what a company does could explain why the share price has a long history of continuously going up, and it can even give you some support on why you want to invest in a company even though its trend is going down. And one of those companies that falls into that great example is Realty Income. Realty Income is a real estate investment trust that focuses on freestanding single tenant properties that they lease out to industry-leading operators, typically with long-term agreements. Some of those tenants include Walgreens, 7-Eleven, CVS, Lowe's, Dollar General, FedEx, and Walmart. When you check out their share price history over the past year and then some, you can see it's going on a downtrend. And you can mostly blame that because of high interest rates due to slowing down inflation. It's been affecting a lot of companies. What makes this company a safe pick is the fact that all of its tenants are essential-based companies that we use as average people every single day. Because of that, and the fact that they've been paying their shareholders every single month for the past 25 years, this is definitely a company that I personally trust to reliably pay me about 25 cents every single month. And it honestly makes sense, with all that being said, why they call themselves a monthly dividend company. Now, if you have bills, you're probably like the rest of us, and you have a job to help you pay those bills. And I really hope that your job is paying you for your work, whether that's bi-weekly, weekly, or every single month. But I know one thing that all of us as employees look forward to working for somebody are those raises, and the more frequent and consistent that those raises happen, the more likely we're gonna stay working for that company. And just like dividend paying stocks, you're probably gonna be more willing to continue to invest in a company that will give you raises every single year by increasing those dividend payouts. And there are dividend paying stocks out there like SPHD that do the exact same thing. Just like QYLD, SPHD is another exchange traded fund, except it invests into a blend of the 50 highest dividend yielding stocks that are also the 50 lowest volatile stocks from the S&P 500. That really shouts out dependability, and you can see that in their dividend payout history, which has been pretty consistent for the past 10 years, and they've been increasing their dividend payout for the past year, even though they've technically been increasing it for a bit longer, but there was a dip in between, I believe, March to May in the year 2021. And if that doesn't impress you, a company I just recently talked about, Realty Income, is another great example, and they've been increasing their dividend payout over the past 30 years. So that's even crazier. And again, another reason why Realty Income is one of, if not my favorite monthly dividend paying company. Monthly dividend paying stocks are definitely beneficial when it comes to giving the shareholder a reliable, consistent stream of passive income to help them pay their bills. But how does that look when you're not necessarily investing with a lot of money? Now, that obviously depends on what not a lot of money is for you and how much you have to pay every single month for bills. But I've been investing into my portfolio for the past 4 years with $25 a week, and I've been actually able to pay a bit of my bills. And I talk about that in this video, so hopefully this can be a bit of inspiration to you, whether you're on the start of your journey or you're kind of in the middle of it and you're questioning it. I'll check you out on that video. I appreciate you guys watching this video. Until next time, as always, take care.